It's unfortunate. Wall Street and the suits keep trying to discourage retail investors from looking towards social media to invest in stocks. They're saying AMC, GameStop are one-time things. They're gonna, fade back down. We're not gonna see a short squeeze happen again. However, a financial advisory firm called Betterment recently came out and said, look, we did a report on over 1,500 people, and this is what they had to say about their investments moving forward. Are they gonna invest in meme stocks? Are they gonna look for short squeeze stocks? And it's actually really surprising and really interesting. Today, we're just gonna have a conversation about what's going on with AMC, GameStop, and also this brand new report from Betterment. So if you enjoy this sort of content, please be sure to like the video, subscribe, and if you don't already have the public.com investing app, make sure to go ahead and follow me on that. You can buy stocks, sell stocks, and see exactly what I'm buying and selling in real time, as well as a full portfolio breakdown. Think of it like an investing app combined with social media. It is completely free to follow me. Use the code Michael when you sign up, and you'll get up to $50 in a free stock. But anyways, let's start off by talking about this new report from Betterment. Financial advisory firm called Betterment recently came out and said, look, we did a report on about 1,500 respondents, a study from April 26, 2021 to May 3rd, 2021. All of them were 18 years of age or older. They all had at least some sort of investments, whether it's in stocks, whether it was in AMC, whether it was in GameStop, and something in the stock market. And essentially what they said is that 97% of those who responded in the survey, they said that if they had invested in stocks driven primarily by social media mentions rather than fundamentals, they would continue doing that. They're saying that, look, we like following the trends on social media. Fundamentals are not as important to us as they are to traditional investors, and this is a way we're going to continue to invest for years to come. So this is something that is very interesting because according to Suits, according to Wall Street, they keep saying that this trend of investing is going to go away. But what we've seen now is that people are looking for something called social arbitrage investing, where they try and find social trends, stuff going on the internet, whether that's on Wall Street Bets, whether that's on just Twitter, whether that's on Google and looking at Google Trends. What we've seen is that many people now, the way they invest, the way they make a lot of money, is trying to identify these trends before they actually take place. It's called social arbitrage investing. So many people who say they do this say that they day trade, they're looking for major opportunities that traditional investing may not be able to return. 2-3x your money is something that wouldn't happen for 20-30 years in investing with a 7% return year over year. But with social media and arbitrage investing, they're saying, look, if we can identify social trends before people start to really talk about it, before the mainstream media really starts to talk about it, well, then maybe we can get some massive gains simply because we're getting in early before other people in the mainstream media are talking about something. So that's what we're seeing right now with social media investing, with respondents who are currently invested in AMC and GameStop and other meme stocks are saying, we're not going to stop. We're going to continue to do this because this is a way we can see us generating much higher returns than with traditional investing. Speaking of GameStop and AMC though, big news this week with GameStop and AMC was actually with something with GameStop moving to the Russell 1000 and AMC staying in the Russell 2000, which is a small cap index. And according to the rebalancing that recently took place, every single year the Russell 1000 and Russell 2000 have a rebalancing where stocks that have a higher market cap move to the Russell 1000, stocks that may have a lower market cap may move to the Russell 2000. And essentially what happened is back in May, when they had the cutoff date, May 7th, there was a cutoff of about $7 billion. And if you had a market cap of over that, you'd move to the Russell 1000. If you had a market cap lower than that, well, you'd be in the Russell 2000. And the interesting thing about this is that AMC, their stock price has exploded since this has happened. And now we are seeing that AMC has a market cap of nearly $30 billion, which is more than GameStop's market cap. So AMC has a higher market cap than GameStop. And also AMC has a higher market cap than nearly 2/3 of the companies in the Russell 1000. So really, they shouldn't be in the Russell 2000 at all. But the importance of this to us retail investors is that, look, when this rebalancing is taking place, it means that AMC is going to be the largest position by far in the Russell 2000. That means the index is going to have to buy more of that stock than they currently own, and it means that AMC's price fluctuations are going to have big impacts on the entire index, which is something that traditional investors, Wall Street, is not so happy about. But either way, right now AMC stock is sitting right at $54 per share. We've seen it consolidate over the last couple of days, over the last 2 weeks or so, after we reached an all-time high of about $72 per share back on June 2nd, 2021. Same with GameStop. After reaching an all-time high, we have seen it consolidate and really be around that $200 to $220 per share range. Now, the interesting thing though is that people are starting to talk about AMC and GameStop a lot less than they used to. If we look at the data from Wall Street Bets, this shows how many times a stock has been mentioned over the last 24 hours of the last 24 trading hours. And this is that SPCE, which is Virgin Galactic, was mentioned the most. And we don't see AMC and GameStop until numbers 7 and 8 on this list. They have fallen dramatically in terms of how much people are talking about it on Wall Street Bets. So that's concerning. But the thing to still keep in mind with AMC and GameStop is that we still have very high short volume ratios. So for people who are saying that the short squeeze won't happen, it's already over, that's not necessarily the case, because the short volume ratio for AMC is still very high, 20%, which is much higher than normal, and GameStop has a short volume ratio of 11%. So either way, while it may not be 100% guaranteed that we're going to see a short squeeze happen, we do know that short sellers are continuing to lose a lot of money, and the short interest is still very high. So if we continue to see this trend with social media investing, and we continue to see people talking about AMC, if we see it go back up on these rankings and we see it get to that number 1 position, it could be very possible that we see a spike in a single day or 2 days for AMC stock price or GameStop stock price, causing short sellers to have to cover their positions and then causing a short squeeze. So we'll see what happens, but that's what's going on with GameStop, AMC, social media arbitrage investing, and what is going on there. But I hope you guys enjoyed today's video, and if you did, please be sure to like the video down below, subscribe, and I'll see you guys in the next episode.